Yo, so I'm going to go through a Silver Bullet London session. So it's 3 a.m. to 4 a.m. New York time for EURUSD. So let's just jump in. Around last night, 7 p.m. Sorry, New York time. Price ran lower, so it took out this sell side here, these lows. So what price did here next? So the next day it ran up early London session to take out these highs here. So this is all manipulation. So this whole run is manipulating, and it's just taking out people who are short a bit early, and they would have had their stops just above here, or here, or here. So when it ran out the buy side here, it then ran lower. So we take a look at the 5 minute. So this is all to do with ICT, by the way. So an ICT advanced breaker is selling at buy stops. So the buy stops are here. This is where you want to be looking to sell. But for me, in my opinion, I haven't seen a short available. There would have been one here if this was a fair value gap. Say that was a fair value gap there, even though it's not. Then that would have been a nice entry here. Or I like to get I like to get into inversion fair value gap as well. So if it became support, broke below, if it tapped into that, that'd have been a nice entry as well. But it didn't. So just got to be a little bit more patient here. And the entry would have been a silver bullet. So it made a high, a low, a high, a high. So obviously that's what a bearish break is. And then you wait for the low to get taken. So this here now, once it took out this low, this here is a bearish breaker block here. So you could have taken these 3 candles here, drew it across, and what does price do? Leaves it, taps back into it, and falls lower. But if you just go down a little bit neater and go to this candle here, the last bearish candle before the push up, if we get the consequent encouragement of this here, so not the consequent encouragement, sorry, the mean threshold. So the mean threshold of this bearish breaker, we go into the 1 minute time frame. So what time is this here? So 3 a.m. So this is where you're looking for a fair value gap. A fair value gap appears at the mean threshold of the bearish breaker here. So that's really nice. So a few confluences there at the mean threshold, stops just above the high and above that bearish breaker, or if you want to be a little bit more cautious, you can go above here, that high there, but I would have just done above this high. And then your take profit, so your take profit could be potentially, let's just keep this neat for now. If you want to get the advanced breaker, so from A to B, this is all time distortion here, this run, you draw from a fib from the high to the low, and then get the standard deviations. By doing that, if you go on to here, it would be like -2, -3, -4, -1. So -1 is literally just one of the one leg. So this from here to here, 1 is literally there, 2, 3. So it's like 3 times of that, basically. So having one, my first target would be the first standard deviation here, because price tends to have a pullback. And then my second target would be this sell side here. Third would be in here, and then next target down here, and then obviously you'd have not much going on here after. Next target would be the consequent encouragement of the previous week. So this is a wick here. Get the consequent encouragement, because wicks are gaps. That could be a nice draw liquidity. So that'd be my next target to take some off. And then my next target would be equal lows here. And then my next target would be these lows here and the bullish order block. Pretty sure it's on the daily. This daily bullish order block here, which price hasn't tapped into just yet. So yeah, exactly. The silver bullet was a nice setup. Another one happens at 10 a.m. to 11 a.m. New York time. So yeah, that was a nice setup that I spotted. And yeah, hope that makes sense. And this is just for my journaling only. So yeah, cool. Shout out to ICT. You can learn all this on his free YouTube. And yeah, be safe.